Superannuation, it's the nest egg Australians depend on. But here's the shocker. Recent scandals have shown us you can lose everything if you trust the wrong hands. So how do you not only protect your super, but potentially 10x it? Well, that's exactly what we're diving into today. We'll reveal the hidden ASX stocks quietly positioned to benefit from Australia's $3.9 trillion super industry, stocks most investors overlook. And wait until you hear about one company in particular that's seeing huge inflows from super funds. That's coming up. With 80 years of combined trading experience, Wealth Within have guided everyday investors through the exact strategies that can transform a portfolio. In fact, one of our students doubled their super this year, and you'll hear the practical steps behind that success today. I'm Dale Gillham, and joining me are Wealth Within professional traders, Janine Cox and Philip Tortevsky. I'm going to go to girls first, lady. Welcome.
What a gentleman.
The pretty in pink.
And it's always fun to have you on the show.
It is. I love having me on the show too. It's a lot of fun. How you doing, Phil?
I'm great, yep. Another good week. The team's back, so let's do it.
Yeah, what an exciting, interesting time on the market at the moment. It's like, is it going to keep going up? Is it going to go down? We're going to get into that later. But super is often seen as boring and slow. But investors are starting to realise it doesn't have to be. So what's the practical way to multiply your super, even 10x it? We've just had a student of ours double their super this year, so how do everyday Australians get results like that without taking reckless risk? Now I'm going to go to the lady that loves risk and security and being a little bit more conservative.
That's right. And look, I mean, I guess it's all about how do you do it in a proper planned way rather than thinking I'm just going to throw the money at the wind. We've heard people put money into Bitcoin and put all of their super into Bitcoin. And obviously, we don't advise that people put all of their funds into one area because that's extremely high risk. So it's about looking at the risk side of it first, obviously, because it's what you don't lose. Obviously, that's the consideration. You've got to make sure that you're managing that risk, but also then how do you actually increase it? Like one of our students, well, it's obviously that they've had an approach that they've found really good rules on some really good stocks that they can trade. And some students actually separate their super into sort of really slow-moving stocks that might be in the top 20 and then have a few that are stocks that higher growth that perhaps outside the 100.
Yeah, I got one of the students I was talking, or a graduate I was talking to 2 weeks ago. He manages 4 self-managed super funds, his own, his wife's, his brother's, and his brother-in-law's. And I said, oh, wow, how come you're doing all 4? And I go, because I'm making 50% the last 12 months. So he said, everybody wants me to manage their super. And I said, start charging them. Anyway, the recent superannuation scandal was a wake-up call. Billions lost through mismanagement and hidden fees. For many Australians, that shattered the idea their super is safe. So the real question is, can people still trust the system to look after their retirement, or is taking control of your own super the only way forward? And if so, what does it actually look like in practice? I'm going to hit to you, Phil.
Yeah, it's a big question. And I mean, look, I think the super funds are slowly catching on to this. You're seeing a lot of self-directed options with a lot of mainstream superannuation funds. So there is that option or that step now to go and manage your super yourself. But I mean, like Janine said, once you take that step forward to manage it yourself, you really do need to know what you're doing. You need to have that risk management in place. And also the portfolio creation. Know which stocks fit where, know how to compound, because at the end of the day, that's what it's all about. Getting those returns, keeping them, compounding them, and utilising the skills we teach here at Wealth Within. I mean, you know, that timing the market myth that you've been told time and time again doesn't exist. It's absolute CRAP. You can get in and out because you're not constricted by the big flow of money that the big players are. So you do have an advantage as a retail trader or an investor. Use it.
Can we just talk about the other side of that coin, okay? Because there's plenty of upside. But what about the ones that are investing their own super that have absolutely no idea and no rules? And when the big crunch comes, what's going to happen there? That's always something.
Well, we always know what happens when the S hits the fan. And we saw that in 2007. We've seen it, the COVID to all sorts of different things.
But the answer is know what you're doing.
Know what you're doing.
How can you expect a good return if you're not prepared.
Well, let's get into that. So we're going to dive in, or it's time to dive into our first 5 superannuation stock, the ones that quietly flying under the radar but set to benefit most as super money flows in. Now stick around though, because after these 5 we'll cover a story shaking up the market that every investor needs to hear, and then we'll reveal the next group of stocks, including one dark horse you actually won't want to miss. Now, Janine, we can cover some of what you're talking about when we're looking at the stocks to share with people, well, this is how you would not get caught in that crash, or this is how you'd not get caught in that. Because I know in 2007 when we were managing 300 and something portfolios, something like that at the time, and literally less than 9-10% was the average loss off the top, and we were getting people coming to us who were clients of ours going, I was with my advisor or this and I've lost 50%, 70%, in one case was 90% of their money. And so how do you not get caught in a crash? So let's get looking into the first stock. So we're going to go with Phil first, or we're going to go with ladies first?
Yeah, I mean, I can start us off and get into, I guess, some of how we picked the stocks for today, because they are hidden stocks. We're going to cover off some big stocks,
yep,
but we're also going to cover off some stocks that aren't that known to the market in terms of the superannuation play. Janine?
Can I just say something? He's got some really interesting stocks here. You're going to want to see these. You're going to show us all of these, Phil?
No, I am not. I'm just going to run through a little bit of the process first, just to cover off how we did what we did.
So some secret, but not a whole secret.
No secrets. But look, let's start off and have a look at what we've done here. This is just a watch list. We've put some markers on dividend yield, PE ratio, 5-year average PE ratio. It's always nice to know companies that are going to be around long enough to pay you a yield, especially if you're looking for super. That's the main goal. And some good market capitalisation stocks over $1 billion in terms of market cap. And what we've come off with from that list, we're looking for some really nice 5-year average PE ratios under that 17% market for the Aussie market. Nicer PE ratio under that 20 odd-ish. But I want to start off with Whitehaven Coal. Now, Whitehaven Coal is one of these stocks that recently received big support by one of the biggest super funds in Australia.
Yep.
Some say they went in because of the really nice yield, but I mean, investing in a space like coal for a big player where the world is renewables, I mean, that's a big statement.
Well, it is. It's not necessarily, what a lot of these big companies like to be seen to be pushing, environmental sustainability, all of that sort of stuff. So that's a nice big play. But
yeah,
let's go and have a look at the chart.
And that's the exciting part. When we get into this chart, it's, finding these opportunities, thinking, okay, if I'm going to put this in my super for the next 4, 5, 6, 7 years, is the stock position today to give me not just the income, but the growth?
Yes.
And the steady growth. And so the mindset has to be flipped in terms of looking for these opportunities that do have good upside, big picture, not just thinking, for example, and I'll say it, a CBA at today's prices.
Yeah.
I mean, sure, in 20, 30 years, maybe the share price will be higher. But today, if you're looking to retire in 5 years, may not be the case.
Well, that's what Janine was saying, it's what you do not lose. And we saw that so often back, I saw it in 87, I saw it in 2007. We saw it more recently when the market moves, people don't get out, they lose 50% or their position drops 50%. But after 2007, it was nearly 10 years before the market made a new all-time high or around about that.
Yep.
So that's when they start making money again, and to me, avoid that and you won't get that long lag time of just getting back to breaking even again. Yeah. So that's what we're talking about.
Absolutely.
More active.
Yeah, and looking at Whitehaven Coal is the perfect example. Just coming out of a major correction, major low, that's what's exciting to me. The stock's fallen around that 59%, as we know, almost 60, huge. Now trading at a significant level. Really found support where the stock found resistance in the past at that crucial $5.50, let's call it $6 to be even. So as long as we hold 6, I think this is a good place to be looking at Whitehaven Coal. But again, like we said, given the volatility of this type of stock, it's really important. If things do turn, don't be afraid to take a profit and get out and wait for the next opportunity.
Perfect. What's the next stock?
Okay, next one we've got is, drum roll,
okay.
Thank you, NRW Holdings. It's taken off like a rocket. This one looks very impressive. It's up to $3.50 at the moment. It's heading towards this prior high. It looks like it's got the momentum to do it. Personally, I'd rather see it fill this gap, pull back it for a couple of weeks, and then take that high out at $4. But if you're not in this one right now, then don't be concerned. Just wait for that pullback. Have the patience to do that. And then this stock has the potential to go to blue sky.
I mean, I think that's important what you just said, because obviously we know with seasonality that September and October September's the worst month of the year normally for the Australian Stock Exchange. It generally ends in negative territory. June's second worst and October's third worst. So generally September and October, it's going to be SHIT.
I always thought January was one of the most volatile months.
No. So there you go. You've just learnt something on the show.
There you go.
That? But we're moving into the worst time of the year, and this is where we need to look at investors, is if you're not already set right now, maybe today or the next few weeks are not the time to get into new stocks just because they've been flying. It's saying, okay, well, we're coming into this area. Now's the time to look at portfolio readjustment. If some of the stocks come off, maybe exit some, but get ready to buy into some of the stocks.
But does that mean if this is the most volatile period, it doesn't mean that it's going to be negative every single year in history, though?
No, but over the last 40 years, we're seeing September being down on average most of those years, and then October, obviously, and June, all three are negative. Whereas as we get closer to the end of the year, like December, January, we start seeing it picking up. So really the strategy is if you buy right at the end of the year and hold to June, it's not a bad strategy. It's not really too bad, especially big stocks. It's a pretty good strategy.
And I mean, 16 weeks straight up, whatever it is on the market. 19, well, at some point, we're getting closer to a reversal. But let's
look at the next stock.
All right. Next, we have Waypoint REIT. Now, this is, I mean, you know, if we want to speak a little bit to that diversification type aspect of things, placed in a position where the stock is not, you know, if you will, run up after a 40, 50, 60% move. So what I mean is we're not sitting here like we were in 2019. We're sitting at the bottom of this, I guess, all important, could potentially be a big accumulation period. And why I like that it is finding that support is this $2.30 level. Really, you can see, without being a rocket scientist, it's holding really, really strongly at that level. Adding a little further weight right now is the potential that we're about to almost break through this long-term momentum line. Oftentimes when you see these types of setups, waiting for that 260, 270 level is the real confirmation springboard. And if that is the case, we're on the monthly chart. Projecting forward out 2, 3, 4 years can be done when you're on the big picture. If this can get through 260, it's got a very real chance to get up to that 290 level.
Given it's a REIT, does it pay good dividends?
Absolutely. Yep. Yeah. All of these stocks are paying over the 5% yield.
Over 5%. Fantastic. Well, that's also good news, obviously, from an invest. If you're going to be putting into super funds, because I know how many times you guys have seen people send us superannuation portfolios and they're full of crap stocks trying to shoot the lights out, whereas those who send us portfolios that are properly set up for super actually get much better returns. They're probably more boring, if I can use that word. Oh, they're just big stocks and they're boring, but they're making better returns, less stress. I know you've got to say something now. I can see your eyes going, I need to say something. Well,
it wasn't something intelligent, because I was going to say, well, if you listen to the start of Phil's segment, you would have heard him say it was a 5% yield.
Oh, wow, I missed that. I was focusing on something else.
But you were just looking after the ones that have just tuned in, though.
I was looking after our regular guests that were just a little bit late because they had some dinner or something else. So can we move on to the next? Can we move on to the next stock? Otherwise, you'll get unboxing
start the ball rolling. MFG's the next one. Okay, let's have a look at that on the screen there. You'll see an incredible looking chart. I mean, this thing just blows my mind as to how far it could go once it gets going. And what's really exciting is we've now seen the test of that low, and it's a really nice test. So this is a classic test when you're looking at what happens as a trader. You like to see this sort of move coming back. You know, I even count the bars just to see how it's performing. It might be a little toppy right now, given that it's been sideways for 3 weeks, and so far it hasn't broken out yet. Doesn't mean it won't, but you know, it might get range bound between 11 and 12, maybe closer to $11. Ideally, I'd like to see a pullback in the tradition that it's had, but not as volatile. What tends to happen after these stocks make these bottoms, Dale, we often see that the volatility that occurred when it was actually testing the low tends to soften off as the market tends to take hold of the stock and the buyers take over. There's less sellers. So, look, I'm really excited about this one.
Yeah, I mean, for me, when you see a stock coming into these sidewaysy type bottoms accumulations, and you overlay that with, well, what's your goal of the superannuation portfolio? It's long term. you're willing to sit in that stock, you're letting it ride, you're getting into a place where, okay, if it goes sideways, not the worst thing, you're still going to pick up a yield. Eventually, over time, you'll get the growth once it goes into expansion. The time element is less, is what I'm saying, so you can afford a stock basing out sideways much more than if you were looking for that growth today. And that's why when you see this, and if it does go sideways, like Janine said, which it could, between 12 and 7, you're still going to collect a nice yield. When that breakout comes, you're going to get that additional growth, which at some point, once this turns around, you're going to get. So you've got that buffer. I hope I'm explaining it right.
Yeah, you do. I mean, the thing is, it's reading between the lines. Your super fund should be a low risk, low activity type portfolio. I'm not saying no activity. I'm saying low activity.
That's for an investor.
No, even for a trader. But you don't need. If you're a trader, if you're picking the right stocks with the long term, which Phil, I'm assuming you're saying 18 months plus. Look, you don't have to look at it too much. Whereas that's the biggest mistake I see people do with their super funds is play with it all the time. You know, that's the wrong thing to do. The more you play with it, the more they stuff up their returns. And it shouldn't be like that. If you want to play with a smaller portfolio, because if you blow it up, you blow it up.
You're saying that some people do short-term trading in their super fund?
Absolutely, way too much. I've met so many people doing it, and I go, what's the returns you're getting? And they tell me, and I go, I'm all over. I'm doing better than that. You know what I mean?
Not on this show, thanks.
Not on this show. I'm going to shut up. Go to the next stock.
All right. Next, we have Myer. Now, another one. And the reason I picked Myer, when you look at it, you might think, okay, retailer, with the way the economy is, you know, all these kinds of things. But when I look at Myer, I think, and although they're in different sectors, I look at the chart of Telstra. Big company, for a long time, it resembled the way Telstra was. Now what I'm seeing in the price action, it's the first time in history we've started to basically get 3 or 4 higher bases with the stock making higher lows. And I mean, when I say in history, I mean in history, forever. And to me, once we start to see this, we do stack those probabilities or the weight that we've turned the corner big picture into an expanding type market. That's the thing that Telstra was resembling a few months ago, a few years ago, where it was around the lows, started looking good. Some people maybe didn't pay attention, and then Telstra is what it is right now. So
it's up nearly 30%, I think, in the last month or two.
More.
40%.
It's beating Bitcoin this year.
It's beating, Telstra's beating Bitcoin.
25.
Well, hello. You serious?
Yeah, it is. Wow. It's 2025 return is higher.
So who needs Bitcoin when you've got Telstra?
Can I just say something?
Yes, you can say 2 things.
Now, mate, you had me at MFG, but you've lost me on this one.
Oh.
Myer, of all stocks.
Not
for the super fund.
Not your shopping favourite.
I'm not going to use a bad word like
you can use the same word that I used if you like. No?
I'm just thinking, no way, like with this one. This is a trading stock, pure and simple. So I'm going to have to disagree on this one. For a start, it's not even through my dollar mark. You put this in here on purpose, didn't you?
Yes.
I know you did.
But, you know, you raise a beautiful question. And to me, that comes to the core of things, because when you are skilled enough and you have the right knowledge, these stocks, for me anyway, are okay to go in a super fund, because the volatility is there, the liquidity is there. It's a you know.
So what level of training are you talking about can handle this type of stock?
Oh, you need to have your technical analysis down pat. You need to have your risk analysis down pat. You need to know how to structure a trade, and you need to have the confidence and discipline to enact your trade. All things that are important with a plan. Without one, none of that happens, right? So education is the first thing, obviously. But when I look at Myer, putting it in a superannuation portfolio, the big yield, where it's positioned today, if I'm looking at Myer at let's just say $3 on the way down, or April 2015 on the way down in the downtrend, I'm agreeing with you, no way. But the way the chart's looking today, to me, it's a different story. We're not in that environment anymore. So why not?
Why not? I think I'll put it in my super fund just to drive Janine crazy.
You just contradicted yourself in terms of how you're defining what should go in a super fund in an earlier conversation, and this one is totally opposite to that.
Long term, low risk. Isn't that long term? Okay, she's not biting, guys. She's not biting. But anyway, if you want to know how we trade and how we pick stocks, it is in this book, How to Beat the Managed Funds by 20%. It's free. You've just got to pay the shipping. So you've just got to head over to our website, wealthwithin.com.au, and check out the store there. Or there's a link in the description below. If you run a self-managed super fund and you follow this, there's actually a super fund portfolio in here, how to do it, how to buy, how to manage it, money management, risk, everything else. You will do very, very well on your self-managed super fund. But all right, that is it for our first 5 stocks. The best are yet to come, so stay tuned. But now the time is for our Janine's trending topic.
Ooh.
I'm looking forward to this.
Okay, before we take a look at potential growth in 2 top ASX telco stocks, it's no secret Australia has anti-competitive legislation to protect consumers. But that didn't stop tech giant Google making a deal with Australian telcos some years ago to provide Android phones loaded with Google's search engine. Finally, the ACCC has given its verdict.
Google has agreed to pay a multi-million-dollar fine for deals struck with major telcos. The corporate watchdog found the internet giant had damaged competition by agreeing with Telstra and Optus to have Google's search pre-installed on Android phones. Those companies then received a share of Google's ad revenue. The federal court will decide if a $55 million fine is warranted.
Now, some of Australia's top ASX telcos have faced the ACCC's scrutiny. It seems the dark days are behind Telstra and TPG. Let's take a look at the charts.
All right, so you're bringing up Telstra first?
Right, Telstra, we've got there first. Now, obviously, Telstra's had a big checkered history, but more recently, and the mouse has just gone nuts on me, won't even let me shut that down. So we're seeing here, obviously it's come from that all-time high. So potentially we could draw the line in the sand and say, what's the potential upside for Telstra? This mouse is playing up, it's not responding properly. But we can see.
You must have Phil's mouse from the other week.
No, I think it's gone to sleep. Here we go. All right, so we drag this across and we can see that that's $9. So first of all, someone who can do their maths quick in their head, I've got a cold at the moment.
The all-time high was like 922 from memory.
85% approximately to that high is potential for Telstra. Will it get there in the short term? That's the big question. I don't think so, not in the short term. Potentially, short term could be another 20% upside for Telstra, around $6, before it has a decent pullback. But I would like to see it come back. We talk about the market pulling back in September. I'd like Telstra to do that now. It's gone up for, 6-8 weeks, straight up.
Months.
Yeah, well, I mean, the market's searching for a high now.
Well, look, it's spent a lot of time. If you look at where Telstra has spent most of its time, it's tended to be across this sort of region here, historically. So again, it makes sense that it's going to do the same thing and find, some challenges around these sort of levels. The $5 mark is some psychological level for Telstra, but ahead of that, once it gets through around that $5 mark, it'll go to $6, and then the next point, of course, is up near that high. But at the moment, it looks good. We just need to see a bit of a pullback in the share price.
I was going to say it's a nice plotter, but when it's going, isn't it? Like, it's actually done stuff spectacular. You got anything to add to it, Phil?
No, I think, after 5, 6, 7 months straight up, like Janine said, there's never been a time in history since 2000 that Telstra hasn't had a pullback. And any solid up run, as we know, is healthy buying and healthy selling, and we're yet to see the selling side. Wait for that as well.
All right, so do you want to bring up TPG while you're talking?
Yes, all right. TPG is the next one. And if we can have a quick look at that, obviously, this is in, although I'd say an interesting spot when we compare it to Telstra. It hasn't run as hard as Telstra. That can be either promising to some, or you might be asking the question, well, why is it lagging? But to me, I mean, real huge level here. So important, $5, $4.85. Based out, you can see as we started to fall along. What's different from this, sharp decline to what we've seen recently is if you measure or scan your eyes over the lows, they're getting shorter and shorter. Then we get the base out, nice little spring up here. And in fact, TPG is starting its pullback. So that's quite interesting to me. I really think if TPG can hold now at $5 or around $5, not take out this low at 431, 5 would be really preferable. That'll tell me if it holds around this high, that'd say buyers are still dominating this trend. And the next leg up, we're looking up and pushing towards the $7 level or thereabouts. So really nice momentum right now that we're experiencing. The sellers will tell us a lot because it's their turn. Once they show their hand and the buyers start coming back up, I think it's very safe to assume that $6.30 to $7 range is next.
Now, I know communications services was one of the best performing sectors. Well, actually was the best performing sectors in the first half of this year. I think 17, 18%, I think that sector. Mainly Telstra, obviously TPG and all that sort of stuff. Do you think it's going to slow down the sector, or is it going to be still keep going at the same pace?
I think it's going to slow down.
So do I.
All right, so there you have it. Well, now it's time to get back into our topic for the night and analyse some more amazing stocks for your super portfolio. And right after, we're going to get into the hottest news this week on one of Australia's biggest stocks. And it's not all rosy, so stay tuned. But now we're going to go back to Phil for the next of your hot sort of stocks for our super fund.
All right, more super stocks. Let's get to the next one, SIQ. Now, Smart Group. This I quite like. And the reason I like it, again, it's all about the timing of when you're looking for that opportunity. Let's go back to 2017. If you said, Phil, buy this for your super fund today, July 2018 at $13 after that run, I'd be saying no. And it's a very similar scenario to what we're seeing now with stocks like CBA and some of the rest. But you fast forward to today, we've come off a really strong correction, and I'd say that'd be around that 50, 60%. Well, there you go, 67%. Come back and tested the low with another major low, showed huge buying, and look at what the sellers are doing. I mean, just knowing this relationship, we teach this stuff all the time, Dale. You know, just knowing this relationship between buyers and sellers is what's going to give you that indication on what comes next. Our students would also be looking at this, licking their lips, saying, this is a pattern that we do.
Well, I can see 4 things already that could go on a trading plan that this stock has done.
Yep.
Exciting things or bad?
I even like this one. Good things.
Wow, that's hello.
Yeah, and we're talking...
Surprise.
Yep, there are some of those on this show.
And we're talking big picture, obviously a really nice yield, healthy PE. The fundamentals are backing it. And what we're seeing now with the way sellers are moving, compressing rather than really capitulating, that's fallen less than half of that buyer activity at a really crucial level here once I mark it up through there at $7.11. Now we're starting to break up. We take out February 2025, we're going to get another run by the buyers, and that could signal the run up to 11. So right now it's quite bullish, I have to be honest.
Wow. Now, obviously, I just want to share with everybody, if you've got a managed super fund, not a self-managed one, because obviously most people with self-managed will be in the stock market. But if you've got a managed one, it's not all... what we're talking about here is still relevant to you, because my brother actually said to me, can you manage my superannuation? I said, well, I'll have to set you up as a self-managed super fund and blah, 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 and we'll set up a broken account. But I said, but then you need to understand what the self-managed super is about, because if ASIC rings you and asks you questions, you're in trouble if you can't answer them. And he went, oh, and I said, but does your super allow you to buy stocks in there? And he goes, oh, I don't know, you're the dude on the investing side, so just work it out. Yeah. So I said, give me your super, and I worked it out, and they do. Yeah. So I'm going, hey, great, perfect, and then I can tell you what you should be having, and then you can just click the buttons. And so don't discount that you can buy these stocks if you have a super fund that allows you to do that. But let's get into the next stock anyway.
All right, the next one is BHP. Thank you very much. Very excited about BHP indeed, this move that we've seen. But I just can't get over how long these stocks, BHP and Rio, have stayed where they have. FMG's made some nice moves more recently and it looks much better. But BHP's just starting to get to a point where we can almost say, yep, the next bull market is well and truly underway.
Doesn't it make sense, but knowing what you know, and you've both, I've learned this from you guys, that at this certain point in the cycle, what's likely to outperform and come, it's almost coming right on time, and it's this materials sector. So,
well, it went from what? The first half year was minus 1.6%.
Yeah.
And now it's up 9 point something. It's like a 500 or 600% turnaround in the return.
Yeah. And
well, the interesting thing is the whole thing's delayed. If we go back in time, we look at the BHP chart, have a look at what was happening here, because I think it's really important. Most of BHP, the time when BHP was a bit sluggish, was actually down here. This was in the early, 2000s up to July 2003.
I was a bit sluggish then myself.
And the market had a low, remember, in March 2003, but then it had an incredible bull run, right? So it's very different now, but we're now in this sort of more of a consolidation on BHP. And it did that all the way, it went bullish all the way up into this high here into 2006, which is what we're expecting BHP to start moving up to new highs, different shape altogether to what we've had before. But it's good to reflect back. January 2007, look at the gains that were made in the last part of the run from this low here. And I've picked the wrong thing off this. Just wait a minute. Got it? It was 100% for BHP out of that low. Now, BHP's obviously got some hurdles to get through. It's got to hold itself above there, but it's starting to look really nice. Last month it closed right down on the bar, sort of a bit less than halfway on that monthly bar or thereabouts, and was still below these levels, but now we're coming back above. I mean, if BHP makes half, let's see where it's going to end up, half of the amount we just talked about before, and I've got to get myself up here. Here we go, climbing. And there's our 50% mark up at around 62. If it goes even 50%, we're talking a $62 price tag for BHP.
And given we're talking about superannuation, having a stock in your super portfolio, BHP obviously one of the biggest that we have on our market. But the part for me that's, you look at where it's come from, and if you are thinking big picture, ask yourself how many times in history has BHP fallen, 50, 60, 70%?
Used to be so regular, like back in the 80s to the early 2000s, it'd go up 116%, come down 50%, go up 116%, come down 50%. And people are going, yeah. And I go, just show them. And it's like, it was very repeatable. So it falling 50% and rising 100% is not unusual for BHP. And that's why understanding a stock's history will help you understand where it's going to into the future.
Yeah,
exactly.
We make money on the white space, not on the space with all the bars on it.
Yeah, and you look at it today, 35% down, let's just say long term, even if it were to fall 50, 60%, much better than trying to buy it, without that buffer. So
looking good at the moment. So what's the next one?
Next is ANZ. I mean, another big bank, one that most super funds would be looking at. Now, obviously, CBA has stolen the limelight in the banking sector, but you look at ANZ, not trading at all-time highs, not euphoric type price action at all. I mean, the last time it had euphoric type price action, I would say, was back during 2020, and that got met with equal amount of selling for the stock to then get back to the natural gradient of rise. And we see that time and time again, another tick for technical analysis in terms of why it is important. But we get to here, we've recently just come back to that sustainable rate of rise, broken out. I think this one here, we're talking, and again, it's for the superannuation, big picture, the hurdle really was that $30 for me. Seems to be cleared through there now, and yes, we're going to get up moves, we're going to get down moves, but as long as we're holding this sustainable rate of rise, this momentum line, and moving up and down on that gradient, then things are going to look good.
It's going to a new all-time high.
It's going to look good for ANZ, yeah.
Well, that's the interesting point. You said, with the chart, as long as you've got your technicals right, and often we get people commenting, on our YouTube videos saying, oh, but look at the fundamentals and this and that and blah, 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 blah. But the technicals are telling us what it's likely to do in the future, even though, because the fundamentals, what we found...
Take time to catch up.
Take time to catch up with that. So the technicals are giving us a signal because they'll tell us when to buy, where the fundamentals tell you what. But even though the fundamentals are bad, they'll, as Janine just said, they catch up. How often does that happen?
Well, we're seeing it now. We're seeing it now with the materials. Coming into the earnings season, all the talk was materials are going to get slammed. It's the worst projected earnings coming for materials, and they've all reported, and you look at the share price of all of them, they're rising. In fact, they were rising a few months beforehand. So you will never know that or see that unless you're following price. Energy, the same thing. These are the things that by following price, as you said, give you that advantage to know when things are happening, because you're only going to make the money on when.
Well, it stands to reason the big end of town, who have people going out to these big companies, knowing what they're going to do, they're buying while everybody else is looking the other way, because they don't want to tell you all the good news while they're buying. Yeah. And that's what's setting up those rises on the stock. So the technical analysis will tell us that. Let's get in with the big boys, and then when all the good news start coming out, then all the retail investors will jump in on the line, and we're seeing that as well. But let's move to the next stock. I know this one is an absolute rip snorter.
Now, this one's for Pedro, Woodside. We often talk about Woodside on the show, but it's a classic one, isn't it?
Would you have
Nice
super?
big-
Yeah.
Look, I guess you could. It could be one of those ones for your super once it's ticked certain boxes, and it's just getting to that point at the moment.
And it does look pretty good.
Yeah, it's starting to look good now. The resistance, this resistance level across here has been broken. It's holding above it, looking nice. Will it come back with the market? Possibly. I mean, we're at a point where it might just edge up a little bit higher before it comes back. But yeah, it's looking very nice. So from where it's trading at the moment, it's probably about, it's less than 15% to that low there. So if it goes up, where could it go? I think we've talked about this on the show before as to the upside for Woodside. 20% is reasonable to think that it could take off.
The real big thing for me, Woodside, is this level through here. We're talking COVID low, and what are we on the monthly chart here? Tested it through there, and this is the third test now. So it's quite an important level, 1960. Just keep that in mind, that's all I'll say.
I was just thinking while you guys were chatting, one of the biggest things I found people with their super funds, when we see the portfolios, their position sizing's all out of whack. I mean, you see position size of 2 and 3% on some stocks and 55, 60% on other stocks, and it's like all over the place. And I know you see that more than Phil and I do nowadays, because you see the portfolios.
You need a review, yeah.
They're sending them into you, and obviously for you to have a look at, because you're going to take them on, and it's like a dog's breakfast, a lot of them. That's part of the big problem with super funds is people running self-managed super funds, they don't have enough money in some stocks that do really well, and they have too much in stocks that run really poorly because they're picking the wrong stock. So basically I was going to say, in my book, we tell you how to do all of that, all your position sizing and how much of each style of stock you should have in your super fund. So it's worth whatever it is for the postage to get the book. So click the link below. But it's really important you get the structure of your super fund set up properly. It's really important you get the style of stocks and the position sizing and the risk done on your super fund, and you'll shoot the lights out, especially now with the market being bullish what it is. But if you don't, you're going to get caught in the next crash, and that's pretty much probably one of the things we dread the most. When the market's going to crash, we see so many people with their super funds get killed. But if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au, and check out our education. It's on the education tab up the top. But moving on, shortly we have hot news coming out on one of our biggest stocks, which is balancing on a knife's edge right now. But first, let's answer your questions. Now, Wayne writes, can you look at rice growers? Its fundamentals look good with a PE ratio of 13 and a gross yield of 7%. Volume has been increasing since mid-2024 and price is moving up nicely and trading at all-time high. I brought into the stock last year and I'll continue to ride it up until it gives me a strong signal to sell. It seems to have just broken out of an accumulation and is now looking very bullish. Interested in hearing your thoughts. What a nice email. I reckon
Fantastic.
Janine will give this one too.
What an amazing choice and a great stock. Well done in doing that. As you can see, Rice Growers has broken out, as you mentioned, and looks incredible right now. And the challenge is, isn't it, how do you actually choose the rules to manage the risk on a stock like this? And it's no different to any other stock. This is what people don't realise. Some people try to use really short-term techniques thinking that they have to do that with these type of stocks. But quite often you might even find a strategy that's on the monthly chart for some of these types of stocks that can work well, especially when they get into full swing. But, this stock could continue to run. Once a stock does something like this, it might have a short pullback and then take off again.
So you're thinking it's gone a bit overheated at the moment?
You wouldn't be buying it right now. That's the challenge for people who are, late to the party. So right now, it's already up around 20%. So it's all about that risk to the downside.
So you're suggesting Wayne go to the monthly chart on this, or you just stay on the weekly?
I'm suggesting that whoever's managing, whoever's got this particular stock, obviously
It's named Wayne.
Wayne, obviously you've got your own rules, otherwise you wouldn't be in it, we hope anyway. So if you've actually done the right thing and set a trading plan and you've got your own rules, then stick with them, continue to manage it. If the stock falls suddenly, just hang in there, because you've got a great support level underneath here around that $12 mark. It might come back. A stock like this, how far does it come back in the past? Let's just have a quick look. We can see that the biggest fall it's had here was around 20%. Most of this rise, it's been small pullbacks. Now, if it continues that sort of personality, then you might only get a short decline before, maybe 7 to 10% before it actually takes off again. So, I'm liking it. I think it's great. I don't think at this point you can use a trend line. There are other rules that we teach, even Trading Mentor, simple set of strategy.
So you're saying don't jump out too early, because that's where a lot of people do. They jump out thinking they're trying to protect their capital, but they don't jump out at the right price.
Exactly.
It only drops a little bit, and then it takes off like a rocket again, and they miss out on the profits, and they start kicking themselves. Well, anyway, we're going to get to our next email, which is from Jigga, and he says, can you please look at a chart of 29 metals? Such a very short email. Maybe our answers should be short. We should keep our answers to the length of our emails. What do you reckon?
We can.
Do you own it? Do you not own it? What are you looking at it? What do you want from us? So,
he did mention he loves the show, and he watches all the time, so thank you very much.
Well, that's good.
But let's have a look.
a few words.
Yes, let's have a look for 29 metals. Now, it would have been nice to know what your plan is, because, just like that previous email, I think the best way you can answer any question is what's your goal, what's your plan? Are you trading short, medium or long term? That answers a lot in terms of what you do next, whether you hold, whether you sell. And so...
Well, we knew Wayne was in the stock, so therefore we could tailor our answer to that. If we don't know whether you're in the stock or not, how do we tailor our answer? How do we talk about where your stop loss should be, or whether you should be getting into it? We could be talking about the wrong things. Yeah,
I think the best way to approach this one is whether we like it today, and I'll just give the big picture analysis. Obviously, it is trading at all-time lows. Anytime stocks come into this world or near all-time lows, especially stocks under $1.20, lower cap stocks, you do have the very real possibility that this just gets stuck sideways and does nothing for a very long time until a catalyst comes out, or it could very well begin that reversal and start rising up. Basically what I'm saying, there's a lot of things that have to go right for a stock like this, because it's not got that institutional flow like a top 50 or top 20 stock for it to be having that buying support. So a lot of things need to go right from the fundamental point of view. But then again, if you are looking at it purely technically, one thing to take note of is this really big spike in volume. We saw on the 2nd of May, it was the highest amount of volume we've ever seen on this stock. Contrary to what happened in the past when we saw the typical or similar volume, was that the stock hasn't actually continued falling. So right now, this is the critical moment. We're seeing sellers come through for about 4 or 5 weeks, not really doing as much damage as buyers have. Yes, we're at all-time lows. I think if we break through that 40 cents or 38 cents, we're going to get another leg up. But am I expecting this to shoot the lights out at these levels? No, like I said, you need a lot of things to go right. A safe expectation would be 60 cents. If you want to trade it to those levels, for now it's purely trading, a trading stock. Once you do really see things turn around, and that would be, a big break above 65 cents for me long term, you'd need to see that at least before you started thinking, all right, we've really turned the corner and gone into it.
Don't jump early, that's what you're saying?
Not unless you want to trade this short term, no.
Yeah, because that's what some people do. They jump in thinking, it's 10% between what Phil said and where the price is now. I can get that if it starts moving. I'll jump in now. But that's what you're saying is don't do that. It's higher risk.
High risk, especially at this end of the market, because there are so many things that need to go right, more so than a top 20 or a top.
Well, there's one technique in the course which when people learn it, they think, oh, wow, and then they start seeing it on every chart, and it's so exciting, and I can see it.
I know that technique. It's called Ask Janine.
I can see it on this particular chart, and it looks really nice. But they put the chart up for you, but I'm actually not going to show you. Isn't that mean?
No, what's not mean? I just didn't want you to keep going. But anyway, it's okay. Now, Rob now writes, I've been looking at PLS and MIN. Both could possibly present a trade for me soon if they can pull back and fill their gaps on the weekly chart. But both of these stocks are on the most shorted list, with PLS ranked 3rd most shorted and MIN ranked 7th. Their short position is 15% and 11%, but it is reducing. So my question is, how much weight do you give the short position when you're looking to trade? You can go, Janine. I know you're champing at the bit to talk.
Well, I think there's short positions on stocks all the time, and you can see that the charts will tell the picture, tell the story. So if the stock takes off and it meets your rules, you'd be crazy not to take it if it was part of your strategy, because you might miss out on a really good trade because those shorts might be unwound at some point when they realise that they're in a higher risk situation. When that happens, the trade could just accelerate and you could end up with more money.
Well, how long was Harvey Norman at the top of the list and it just kept going up and up and up and up and up? And it was like a couple of years, wasn't it? It was like constantly. So what you're saying is you don't pay any attention to it if you get a good buy signal.
JB Hi-Fi was one of the most shorted stocks at one stage as well, wasn't it?
Yeah, correct.
And that's case in point. It's
Sigma.
Yeah.
Look what that's
So
done.
you're both saying don't pay any attention to the short?
Well, we had a show recently that, Phil put together some information on which explained to you, which show was that? It was a couple of weeks ago, wasn't it?
I think it was
Last week.
on the after party.
On the after party, okay.
That makes a lot of sense.
On the Talking Wealth part we do, so okay, so we didn't do that. But anyway, basically what we're saying is don't pay too much attention and follow your technicals and they will look after you. Now, Christina is next and she writes, I've been keeping an eye on ANZ since it was mentioned in your show a little while ago. It has taken off upwards since the interest rate cut. Where do you think the current upside will reach in the medium term? I'm going to go to Phil.
Yeah, I mean, ANZ was one that we covered just a second ago, but let's go back to the chart and quickly recap what we were referring to. And I mean, given now we've really come back to the sustainable gradient of rise with ANZ and we've cleared that $30 level. To me, they're the two most important levels. As long as we hold 30, as long as we hold this momentum line, I think we're attacking $35, $36. That's next. And that's a very, I guess, conservative type move. Will that happen tomorrow? Maybe not, because we've had really strong expansion on this week. So I wouldn't be surprised if we settle down around these highs, given we've taken out that previous significant high there. I wouldn't be surprised for a move back down to about $31. But we are in trend. Higher highs, good expansion. Right now, there's nothing telling me, especially if we hold over 30, that in the medium term, we're not going to possibly even take out a new all-time high.
She's asking about how far do we think it's going to go, what the potential rise in, and really it's not relevant, is it?
No.
That's what we said. Nobody ever rings me when a stock's going up.
Well, it's relevant if you're going to go into a trade.
At the point of going into the trade,
it's relevant if you're thinking about selling your stock, which you might
correct,
be.
but that's the point is you have an exit strategy. That's what I was saying. Whilst it's going up, you stay with it regardless, because I know myself, a lot of people, like I've been holding CommBank for a while and it's just shooting the lights out. And every time it looks like it's going to come down, and people are asking, should I sell CommBank? But it's like, as long as you've got your exit strategy that's protecting it, and you get out if it comes below that. If it keeps going up, keep moving your exit strategy up. That's pretty much as simple. So you capture the majority of the profit, which is, again, why you should read my book.
Well, it's getting close now, isn't it?
Well, what? Commonwealth Bank or ANZ?
Commonwealth Bank. Well,
yeah,
look,
I am thinking about that at the moment. I was only saying this morning to Janine, I'm thinking about I might need to sell Commonwealth Bank now. And that's fine. I've made a gazillion dollars on it over the time I've held it. But it gives you certain periods of time where it's just consolidating or drops a little bit and it's like, a lot of people sold that stock off thinking it was it and then it took off again. So all too often people jump out when they think, it's gone too hard or it's gone too far, because they don't have proper exit strategies. And that's one of the biggest things we teach people, investors and traders, is how to get out at the right place. But anyway, let's move on. We've got Ben's email is next. He said, I bought West Wits Mining. Say that fast 3 times. Gold stock about 3 years ago at 2 cents. It's starting to look good with great fundamentals. Just wanted to get your thoughts on the chart. A gold stock at 2 cents. That's got to be one of Janine's, doesn't it? I'll go to you, Phil.
Yeah, look, I'm glad you mentioned you are looking at the fundamentals, because this is one of those ones at an area where you really do need to be on top of catalysts, key dates, when all things are about to pop off and really follow that. Some volumes come in. We're talking about a 4 cent stock. Yes, it's broken out. Really beautiful accumulation on the breakout. The only thing I would say, looking at these weekly bars, this is probably highly liquid. And for the fact that it is highly liquid, hopefully the position size you've put into the market, you're going to be able to scale out when things turn around or when your exit, does reach. And so right now it's broken out, great. Looks like it's going for a bit of a run. I think there is a level through here that would be the next level of resistance where it's come into right now. If it clears 3.5, 4 cents, closes above, you can see it tried it back in August 2016, but didn't close above and broke back down. So a nice close above 4 cents would basically give you a really nice trigger for this stock to push all the way up to the next level, which would be somewhere, if we can get this mouse ticking on up, around that 7 cents, and then maybe even up to that 12 cents. So I like this, broken out, expanding on the way out, volume coming through. Just be mindful of the liquidity and also stay on top of the news flow.
Yeah, because I was just thinking about, it looks like he's bought it on fundamentals, which is okay. We don't have a problem with that. He's asked for our chart view, and that's sort of implied that he's bought it on fundamentals. But the trick now for him is, because he's probably 50% in profit if it's around 3 cents now, is how do you get out of it?
How do you keep
and
it?
if it does take off to the levels, and you shouldn't rely on, whilst that's Phil's best guess today, it may not go to that 7 cents or 9 cents. And what if it does? Is it likely to just completely capitulate at the other side about where do you get out? That's more important. So getting into it is great. Being in it is still great at the moment because it's going up. But I think you need to really look at, well, how are you going to get out and what's the right timing?
I had a conversation with a guy the other day who buys these types of gold stocks and does all the fundamentals to the
some of them can be great if you do that.
high level of detail. But he's actually going to sign up to do our course because he realised that at some point along the way he kept selling out and the stocks kept taking off and kept going.
Yep.
And so just to have that understanding of the exit strategies, not just the entry, because he could stay in stocks.
Make far more money.
He could stay in stocks for an incredible amount of time before they eventually do what he expects. And a lot of them have.
Returns. Yeah.
But, that's wasted time, isn't it?
Absolutely. It really, really is. So now, but we need to get into Phil's hot stock tip for the week. So I'm going to throw it over to you, Phil.
Yes, all right. Now, this week we are going to be covering some big news coming out of CSL today. Now, they came out with their latest results on the screen where CSL posted 14% profit growth and a $750 million buyback, but the shares have fallen actually 15% due to revenue misses, 3,000 job cuts, and plans to divest its Seqirus vaccine business. Now, while restructuring aims for long-term gains, short-term disruptions have worried investors. As mentioned, obviously the share price is down 15% today. And so we are poised at an interesting level for the stock. Now,
Is that an opportunity?
Well, that's why, this one really is on a knife edge right now, and it may well be an overreaction by the market, given where that price level is today, meaning it could spell an interesting opportunity for CSL. But that's the reason why I wanted to bring it up today and really get into the technical side of things to, I guess, iron out that, what are the risk-reward scenarios? Do you buy the bad news? Sometimes there's very real opportunity in that. How will it finish by the end of the day? And will this divestment long-term, Janine's laughing at me, but will the divestment long-term mean good things? Job cuts, okay, doesn't look good in the media or on paper, but it's cost cutting.
Yep.
Getting rid of this arm of the business potentially long term could be beneficial. So, let's get to the chart, I think, and have a look.
Let's have a look at the chart, because obviously divesting means you can free up capital.
Yeah.
You can focus in other areas that are much more profitable. There's a whole range of benefits to that.
And the reality of CSL right now is that it's been stuck sideways. And we're there again. I mean, the two major levels that we're talking about on CSL have been that $2.40 or $2.30 level where the stock sits today, down 15% around that 232, and stuck at that high of 320. We've also got to think about the overriding pharmaceutical stuff coming out of the US, the tariff situation that is playing on right now, in this space, not necessarily directly on CSL, but in this space. And when we go back to that chart, let's just take all that away, what I just said, and look purely technical, because that's going to give us the real indication. This type of formation could mean a huge, distribution type pattern, a huge top in the market also.
Yeah.
So I'm very weary of that situation as well. So this stock talk is also for people looking that are maybe holding this stock. What do you do next? Because if we now break down below that 220, 219 level, this will be the first time throughout this whole sideways move where if you were to measure the way price action has unfolded, you can see it's really gone like this, right? Naturally.
That's 6 or 7 years.
That's right. But this would be now, with the way it's moved up recently up to the August 25 high, this will be the first time on a monthly gradient that the price action has actually done this. And that is very different to what we've seen in the past. That is the concern for CSL today. If it doesn't hold these 230 levels, we might be on the start of a bigger move down, and potentially a bigger move down all the way down to this, I guess, sustainable rate of rise, which is somewhere in the vicinity of $200. So that is a very real possibility for CSL now. Maybe the better opportunity is around 200, but if we hold through this level and start reversing, then you start to get the sniff of this is an overreaction.
Does that big pattern normally signal a bearish stock or a bullish stock?
It always depends on the initial move out. And sometimes not the initial, could be the second, but it can be both, basically, because it could be a big accumulation following an uptrend. And it's the confirmation, I think, is what you're getting at, is what separates the knowing from the guessing.
The guessing, yeah.
And right now, I think the best way to treat this scenario, if you are a trader, you do what the market gives you. Whilst it's sideways range bound, you treat it as such. You trade it range bound. Once it starts to break out, there are strategies and techniques that we do teach in order to capture that. So right now, it's looking like it may break down to the downside. And so there are strategies in place to manage that and work with that. None more so than watching that $200 level. But if we just break down and manage to hold in terms of the close above 323, that might just be a fake out, an overreaction, meaning that turns into a buying opportunity within the range. I've said a lot. Hopefully I haven't confused anyone, but...
No. I'm just waiting for the Friday. If it's looking good on Friday, if price is up on Friday, making back up that 15%, I'm going to be checking it out a lot more next week, that's for sure anyway. But if you do want more from us, check out our video. The next ASX mining boom is here. BHP, FMG, Rio and more.